get some of the participants. We opened it up about a minute early, so that's good. Get some of our participants in. Tony's gonna hit the chat box, which is just let everybody know they can go there. So far we've got us in here, so it's good. Hey Tony, what did we have, since it looks like it's just us, what did we have pre-sign up for this?
16.
Oh, that's good. Okay, good. All right, good. So we'll give everybody a little time to get in there. So interesting. Yeah, I got the participants list up in front. So, and right now it's just
leave my screen up here, Rich.
Yeah, leave it up. Oh no, your screen looks great. Like I said, I like that view. I like that view of the city. So.
Yeah, I don't know if anybody's on, but I took my daughter down to the city on a Sunday a couple months ago, right now. And I'm driving down Michigan Avenue, and just, you know, there were more people walking, which there wasn't many people walking than there were cars. And I just did a U-turn on Michigan, you know, when can you do that? Downstate, went to Wrigleyville. I mean, to get from, I'm out west suburbs, but the Eisenhower just all the way in, no traffic.
Yeah.
Different experience driving.
Yeah, it's been different driving. You can tell people are back to work though now. It's like now that I'm on the roads, it's a little bit busier, so all the way around. So
yeah, I was coming home from Wisconsin Sunday, and I'm like, it's a little bit of traffic out here, you know.
Well, everybody's coming back from where they can go have dinner and eat and go out to a bar. So you know, there was a big rush on Wisconsin when they opened ahead of us.
Yeah.
All right, looks like we've got a attendee, which is good. Oh, Anna's in here. Hey, Anna, that's cool. Good deal. Get things started. So we're going to let some attendees roll into here before we get started. Actually, we could probably talk about, probably start talking, John, about you a little bit. So everybody, hi, it's Richard Kimball with Cross Country Mortgage. And we're super happy to be talking to you guys today about the Illinois Housing Development Authority. It is one of the best, in my opinion, providers of down payment assistance here in the Chicagoland area. We're really honored to have John Maxim with us. John's been with the Illinois Housing Development Authority for about 7 years and in the industry for about 17. And John, we'll kind of kick things off here, since as I remember from the slides, kind of talks a little bit about the history, and then as we get people ramped on, we'll start getting into the program. So with that, John, you've got the main screen. Oh, one last thing. There is a participant screen, a chat screen, and as you guys are seeing inputting questions, I'll kind of interrupt or squeeze in John's presentation, get your questions to him so he could focus on the presentation. I'll focus on the chat box. Other than that, John, the floor is yours.
Thank you very much, Rich. And as we go along, if you want to throw questions out there, most certainly do. We've worked with, I remember, Rich, I've been with IHDA, like you said, 7 years. I remember you're one of the first when I moved into the account manager position. I don't know how I ran into you or met you, but we just started working together. That was about 4 years ago. I've been account rep. So we've had a good relationship. Appreciate the relationship we have with you. Appreciate you letting me come on and the people joining us. So ask away. It's a little different when you're on these Zoom meetings because you're not getting that direct interaction, but ask away on questions. A little bit about us, about IHDA. We've been around since 1967, so over 50 years now. Our mission is to preserve and create affordable and safe places to live for low to moderate income families across, it says the Illinois, but it should say Illinois. But our programs are for low to moderate income families. Now, when we talk about low to moderate income families, if you look in Cook, Will, DuPage, that's $106,920 per year. So it's not all low income as you think about it. I'll talk about some changes we made to the way we calculate income, but it is low to moderate income. But every year, about 10% of first-time home buyers use our program to purchase their first home buyer is in Illinois. The numbers worked out, it comes out to 1 in 10 home buyers. Our programs are for low to moderate income, so not everybody would qualify anyway, but a good portion use our programs. About 6,000 loans per year are done through our lender base over 160 lenders.
Well,
So,
and hey, John, and I'll comment. I know you talk about low to moderate income, but that bar was raised pretty decently over the last couple of years. So I think you guys catch a lot more families than you probably used to.
absolutely, absolutely. And I'll mention it now, but a couple changes we made it's been about a month and a half now, is we used to have to count everybody in your household. So it was your borrower, their legally married spouse, even if they weren't going to live in the household, and anybody 18 or over live in the household, even if they weren't a borrower. So say you had grandma living with you, say you had a 20-year-old son working a part or whatever job, all that income had to be counted towards our income limits. About a month and a half ago, we switched it to just your borrower's income have to be counted towards those limits. So if you have a married couple per se, and only one of them is a borrower on the loan, we only have to include their income now towards those income limits. So that's a big change.
Yeah, that's a great change because I know that is eliminated loans that we could have taken in this direction before. So it's a huge deal. Great job for IHDA to do that. So
yeah, and that took actually our managing director Tara Pavlik, who's been with us over 10 years. She had to go to a rule board over about 2 years and actually get the definition changed. So it was a long process, but what it allows is, say you have a married couple, they both make $60,000, only one of them is going on a loan. With our previous rules, they make 120 as a household, they wouldn't qualify. With the rule change now of only one of them's on a loan, we would only have to count that one person's income, that 60,000, they still qualify for the program. So that opens it up to more borrowers for our program. Here's some facts I can go over. I don't want to bore you with, things, but we've done, since 2009, I think that's when Tara started, the managing director. We've done over, I should say the lenders have done over $5.4 billion in first loan originations, over $318 million in down payment assistance. So like I said, the program's used. The lenders do about 6,000 loans a year with our programs. Here's some other stats. Just not nationwide, statewide, average purchase price is $139,000. So if you get down to central and southern Illinois, you might see a $40,000 purchase. And then as you come up here in Chicagoland, it might be $250,000 or whatever. But these are just some stats interesting to look at. Average borrower income last year was $60,000 per year. Numbers of home finances. So what I enjoy about working for IHDA, we do have a big impact on the home buying community. Even through all the COVID-19, all the changes, our programs have remained out there and everything. So it is nice. I know it's kind of off subject, but even though, we're going through this as a society, the purchase business has been really strong, which is interesting, but it's favorable. I see it. I don't know about inventory. I'm sure some of your participants on this call will know, but purchases are going real well right now.
Hey, John, how is your, to that end, how has your business been year over year?
So actually in May, our business compared last May to this May, our business was up 50%. 50%. So there's, so many influences and things that affect that. But yeah, our business was actually up 50% this year. So like I said, it's weird. I personally thought purchases would have been more affected with everything going on, but I'm sure you've seen, refi business is strong, but purchase business is still remaining strong. And I believe, I don't have the stats in front of me, I believe Illinois has actually increased. You read articles about purchase business decreasing, but I believe Illinois has increased. So
cool. What do we got on the next slide?
Sure, absolutely. So this is just a survey from the National Association of Realtors. 39% of people still believe you need 20% down. So, 4 out of 10 people still think you need 20% down. So, as most of the people on the call know, FHA allows 3.5% down. I'm not the lender. You are, Rich, but there's programs. Plus, you can combine them with IHDA where they can get into a house with relatively little money. A few highlights about our programs in case you're kind case the agents don't know, we don't have to review anything prior to close. IHDA doesn't. It's all in the hand of Rich and his company. They review everything. They clear everything. They don't need our approval to close the loan. So that allows you to meet your closing times and your usual closing day turnaround times. We don't want to hold up your loan. So we give the complete control to the lender. And these are a couple things that changed. I talked about the borrower's income only being used for our income limits. So don't have to use a non-borrowing spouse or someone else living in the house. And also the ones that have done it, we used to have a seller affidavit that the seller had to sign. We've eliminated that also. So you don't have to have the seller sign any special doc because the borrower is doing IHDA. So we've eliminated that doc. So that's a couple of things. We made it easier to do our loans, actually. Some of our qualifications on every IHDA purchase, the borrower has to have some contribution or skin in the game. I like to use of $1,000 or 1% of the purchase price, whichever is greater. What that means is, say, I'm going to use nice simple numbers. Say they're buying a $100,000 house, and they're going FHA financing. They generally, and I'm not the lender, but they generally need 3.5% down. That's $3,500. So we have a program, I'll talk about the programs in a minute, that gives you 4%. So we're going to give you $4,000. That might look like the borrower can walk into the house. Maybe you have seller concessions without a dime out of pocket. If that's the case, we still require them to put some skin in the game of $1,000 or 1% of the purchase price, whichever is more. That can be your earnest money. So most of the time you're given a 1% earnest money deposit or $1,000. Or something else they contribute to the purchase, appraisal, inspection, so on and so forth. So they do need some skin in the game. They can't walk into the house without zero money down. Types of property you can do with IHDA, everything's got to be primary residence, owner occupied, but you can do a single family, condo, a townhouse, and up to a 2-unit property. So they can't buy a 2-unit property if they occupy 1 unit, but they could occupy 1 unit and lease out the other unit. Income and purchase price limits apply to all our loans. So I'll show you the chart right here. Disregard this loans with MCC. MCC, it's a mortgage credit certificate. I'm not going to talk about it today because there's so much allocated per year, and actually we're running out of allocation. We just announced that. So I'm not going to talk about a mortgage credit certificate today or MCC. So let's focus on the non-MCC loans. This is your borrower or borrower's income limit max for our programs. So you can see Cook, DuPage, Kane, Lake, McHenry, Will. They can be, the borrowers on the loan can make up to $106,920. Other counties, if you're going, outside the Chicago area, $98,160. So like Rich mentioned, I mentioned it, it's low to moderate household incomes. So that's it. That's the income limits. Purchase price limits are based on county also, but if you're buying in Cook, DuPage, Kane, Lake, McHenry, and Will, 1 unit is $331,000, 2 units is $423,000. So now that our purchase, our household income limits have risen a little bit, these can come into play. Generally, they didn't because these were lower and they wouldn't qualify for a loan above this, but you have to keep this in mind. There are purchase price limits. So income limits and purchase price limits on every loan. First time and repeat buyers are eligible. So with the programs I'll talk about in just a minute, you don't have to be a first time home buyer, meaning you can have owned a home in the past 3 years. You can own a home now. These programs actually allow you to retain a residence as, say you want to retain it as an investment and buy a new primary residence with these programs. You can do that as long as agency guidelines permit. Agency guidelines, Rich can explain better, but you have, FHA, conventional, you can't have 2 FHA loans generally, but talk to Rich about that. But you don't have to be a first-time home buyer to use these. And everything you need a 640 minimum FICO score. There's some additional overlays that have been implemented because of COVID. If you have a 640, 660, you have to have some time on the job. Matter of fact, I believe all the programs you need some time on the job. Rich can go over the details, but I just want to give you the highlights of basically the qualifications.
Yeah, I'll tell you too, John, on this. It's interesting. So we have, as cross country, we have down payment assistance programs all over the nation. And our company, because some of the programs are a little aggressive, so our company has some additional guidelines relative to that. But when we apply those guidelines to your program, our guidelines actually pretty much match or mirror your program. So we have a minimum of 640, even though in Ohio you might be able to go to 620. You know, we have minimum 1% in contribution, even though in another state they might not require anything. So it's just kind of interesting. Some of our extra guidelines are really just your true guidelines. So we're very fortunate that way.
Yeah, and it's matched up well. So that's great. And I'll go over the 3 programs. They're all called Access. I think the PowerPoint's labeled Access to Homeownership. So they're all called Access. The first one is Access Forgivable. And what that gives the borrower is 4% of the purchase price and assistance up to $6,000, which means if they're purchasing a $100,000 house, we would give $4,000 assistance. $150,000 or above, it's going to max out at $6,000. So that's the down payment assistance, closing cost assistance, whatever you want to call it. They can use this 4% up to $6,000. The way that works, you're going to have a second mortgage. I'm going to use $6,000 for example, but you're going to have a second mortgage for $6,000. It is forgivable over 10 years, meaning if they do not sell, refinance, or move out of the property in 10 years, that $6,000 is forgiven. If they do sell, refinance, or move out of the property within that 10 years, they're going to be paying back a portion of that $6,000. The way it works is the $6,000 divided over 10 years or 120 months is forgiven at $50 per month. So they can roughly see when they close, they're looking to sell, when they close, how many years and months have passed, and figure out a rough payoff. You can contact us. We'll give you an exact payoff, but that's how you can figure it out. So this, once again, just quick recap, they get 4% of the purchase price up to $6,000 max, forgiven evenly over 10 years. All right.
Hey, John,
so yes.
John, what if a client's in that property for 7 years and they convert that property to a rental? Is there anything that they could owe relative to the remaining 3 years, or how does something like that work?
Absolutely. Yeah. They did that because they're not occupying the property. They would have to pay back, if it was at the 7-year mark, about 30% of the or of the assistance given. Okay. So it's, like I said, it's forgiven. So they sell, refinance, or fail to occupy the property, they have to pay back that prorated portion.
Okay.
That 10 years. So that's the first option. The second option we have right now, it's called the Deferred Program. And I know people use this, and it's not used as much as the Forgivable, but it gives you a little bit more assistance. It's 5% of the purchase price up to $7,500. All it is a deferred loan. There's no forgiveness. There's no payments, but you will be paying it back when you sell, refinance, or move it out of the house. It's like borrowing money from a family member, a rich uncle, or however you want to put it. And he or she goes, when you sell, refinance, or move out, I need my money back.
Right. No interest, and there's no additional interest charge, which is an important point to that. So
correct. So it just sits there as, I don't know, legally you can call this it, but a silent, almost like a silent second. It's not incurring any fees, any interest. It's just when you sell, refinance, or move out, you have to pay it back.
Okay.
So it provides a little bit more money, 5% up to $7,500. But, you know, I talked to one lender. Like I said, our programs, you have to occupy the property, but the borrower was buying the house to live in, fix up over a year. They were going to sell it in a year. That was their goal. Interest-free money. That's why they used it. That's why they used this program. They were only going to stay a year. That was their plan. So that's one way it was done. And then the third option we have is called the Repayable Option. This gives you 10% of the purchase price up to $10,000 maximum. So they're buying under $100,000, they're going to get 10% of the purchase price and assistance. Over $100,000, we're going to give them $10,000. The way that $10,000 works, I should say up to $10,000, they pay it back to us monthly at 0% interest. It's made over 10 years. So to figure out the payment, you divide the amount by 120. So if you divide the 10,000 by 120, it's 83.67 per month.
Yep.
So this is, I've seen this used for all kinds of purposes. Sometimes that 10,000 might get them to 20% down, and they void them MI for conventional. So there's all kinds of ways. You can't stack the programs together. It's only one of the program they can choose, but really depending on their situation, what works best. So just a recap on the programs: the forgivable, that's a 4% up to 6,000. There's no monthly payments. The deferred, there's one program at the end. The repayable, every single month they're going to be paying towards that assistance. Little recap on those programs. So let me go ahead and we just listed on this slide. We listed some partnering opportunities. Right now, a lot of things. Us at IHDA, we're all working remote right now. I'm not allowed to be out in the field visiting stuff. But once things open up, if you need us, I mean, Rich, I'm sure Rich is completely open. If you want to do a home buyer workshop or seminars, I can come out there and speak on behalf of IHDA. Rich can represent cross country. I mentioned in the beginning, does a lot of IHDAs with us. You know the program well, Rich. Yep. If you want us to come out and explain the programs to your office, I can most certainly do that. We have 3 reps. We also have a bilingual rep. She speaks Spanish. So if you need that, we definitely have that for you. We do have some rider signs. And I'll send you a picture of those, Rich. And I can get some out to you or whatever. But they can put on their, their sign and the realtor signs in the yards.
That's great.
Assistance available. So
yeah, give me some of those. We'll see if some of the participants would like to put some of those on their listings.
Yeah, and that could just, I mean, even if it generates a phone call. I mean, I tell you, Rich, I'm like, not every borrower is even eligible for IHDA. Maybe they're not in a situation where IHDA is the best thing, but anything to generate interest or phone calls is always good. And you guys are welcome to advertise our programs on your website and everything. And if your buyer wants to talk to us, we don't mind talking to the buyer at all, the borrower. If you have any questions, if you want to call us, please reach out. We're there to help. One thing I pride myself on is customer service. Rich will tell you, I'll either answer the phone or I will get back to you. So definitely reach out. We're all team at IHDA. Me, myself, I'm straight salary. I don't make commission, but I enjoy what I do. So definitely reach out. This is our team right here. Account managers. We have Rachel, myself, and Rosie. Rosie is bilingual. We're all team. So if you need anything, please, most certainly, reach out to us.
Yeah, John, you guys are great. We also have a bilingual person on our team that can actually assist as well. So that's good. I know some of my real estate agents have taken some of the flyers that you have or we can develop and put it out on Facebook to say, there's down payment assistance available. Please contact me. So if you're looking to do something like that and create an ad like that, John's got a little bit of a space where they can create an ad, not an ad, but it's really just a printed marketing piece really. And then we can go ahead and customize that. And then our own marketing department actually can customize something that you can put on Facebook and advertise that you have access to no money down, or in this case, down payment assistance.
Yeah. And I mean, like I said, even if you go, hey, you want to get the guy from, I know that sounds bad, get the guy. But if you want me to get someone from IHDA on the phone, let's get them on the phone. Questions. That makes it, I mean, you sound more reputable as a realtor as far as the programs. Let's get them on the phone with any questions. I know Rich is going to be doing your loan, right? But if they want to speak to us or have any questions just for clarity, feel free. This email right here, mortgage@ihda.org, you can see this is my work cell phone number. This 800 number, a bunch of people answer. But mortgage@ihda.org. If you have any questions for us, that's answered by a bunch of people. So mortgage@IHDA.org. Reach out to us. We'll definitely get back to you and everything.
John, I got a couple questions. First of all, where does your money come from that you guys put out in the street?
So that's a great question, Rich. We will take money from anybody. And I say that jokingly as you drink your coffee. But we had a program called First Home Illinois. It was $7,500 in certain counties. That was money from the U.S. Treasury, hardest hit. So it had to be used for certain communities, counties it was in. were the more hardest hit communities. That program was limited time, and it kept on going for years, actually. And finally, that wrapped up the beginning of this year. The access programs I just talked about, those are actually funds raised by IDA through bonding. So
Okay.
those programs, these are not limited programs, access programs. They're, I mean, we've had this formation of I think for about 2 years now, but they might tweak on the way they work, but these are our core programs. So it's not like limited funding or anything, these programs. We might come out with programs over the time that is limited funding. I believe, and don't quote me on this, I believe there's a press announcement for assistance for like rental coming out today. I think they're
Okay.
working with the governor. Also to help homeowners with their mortgage payments. I have no details whatsoever, but IDA was awarded like hundreds of millions of dollars recently. And I think that will all be announced today. And I have no details on it. But even in your line of work, you know someone's struggling right now to make their mortgage payments or whatever, check what programs we have out there. It might be other departments, but you know, if someone's struggling right now and they can get help with their rent or mortgage payment, I think that's awesome. I really think that's awesome. So definitely, you know, I know it might not directly help you now, but you help somebody. Yeah, Rich.
So we had another question that I have is, now I lost my one of my screens, so I had to kind of move everything over. If you guys seen that, and my angle's a little different, but in the one screen that you showed, I don't know if you had shown this portion, but did you show not only the income limits but the purchase price limits for the local area?
Absolutely. I can go back to that right now.
Okay.
So these were the
That's that
income.
one. Okay, that's that one, that slide. Okay, perfect, perfect.
Yes,
So
that's the purchase price limits. So depending on county, but you can see, you know, single unit and then 2 units.
So the really important part about this is I had mentioned before that that number, that 106 920, that's pretty encompassing. You know, even if I'm trying to do, Fannie Mae's got a program out there called Home Ready, Freddie Mac's called Home Possible, but on those programs, my income restrictions are closer to, they're like 80,000, maybe even 60,000. So with IDA's program going as high as 106, that's a really good deal. It's going to definitely help more people get in. Now, the other interesting thing about this, and I've actually found, I won't say the bank, but I had one of the banks that does business with John and Ida. They had issued a pre-approval for somebody over 331 on a single family, which I thought was kind of funny because the borrower had no chance of getting into the product or the home without help from the Illinois Housing Development Authority. Yet the purchase price that they pre-approved them for like 400,000. So you guys definitely have a purchase price limit right here, correct?
You are absolutely
Yeah.
correct. And
So it's just interesting that so just watch that, guys, as you see your pre-approvals. You'll only be able to go so far. You know, this limit, I don't know, John, maybe you could speak to where that 331,205 number comes from.
so the exact, let's see. I'm like reading the thing here. So I know it's based off a percentage of the average purchase price in the area. Beyond that, I honestly don't know. It's weird because if you look at their cents, right? So it has to be a percentage of, I don't know if it's average purchase price in the area or really exactly how it's calculated. The 106,920, that's based off, I believe, 120% of the area median income for the county.
Yeah.
So I think the purchase price correlates to it. But
Correct.
as
Yeah,
far
I
as
think
the way it's calculated, I don't have that information.
Yeah, I think median's like 84.9, so that 106 number is probably right there as far as that the percentage. So when I'm dealing with Home Possible and then the Fannie Mae program for the 3% down, which doesn't have down payment assistance, but offers the home buyer a little bit reduced mortgage insurance and definitely a better interest rate. It gets rid of some of the add-ons that Fannie likes to tag on. So, but that's like 84,000. Your program at least goes to 106, so that's good news. as far as that's concerned. Well, good. I'm glad. I figured I missed this chart. I want to make sure I covered it. And John, how are you doing? You got everything covered that you wanted to cover so far today?
I think so. Like I said,
Okay.
I've done some of these, and it's different when you're not in front of that live audience or whatever, But like I said, reach out. I'm glad you mentioned about the another bank or whatever was they're up to 400,000. I encourage even the realtors, if you want to call me and be like, hey, my lender told my customer this, I don't mind going, no, actually we're maxed at 331. I mean, if you want to have the lender loan officer give me a call, I can explain it. But even with questions like that, because this is just personal, but you'd hate to get where you're about to close and then you're like, oh crud, we can't because now they can't get IHDA. That's heartbreaking, and I don't want to. I hate seeing stuff like that happen. So
Absolutely. Well, good. Any other questions that we have? You guys can hit the chat box. Any question that you've got about down payment assistance, Illinois Housing Development Authority, that would be fire them in now. Otherwise, Tony, I'm not sure. Does corporate have something coming up as far as a webinar tomorrow?
Give me one moment, I'll tell you.
It might have been part of a series. So
I think it is.
Okay. Yeah, there was a series that corporate put on, and we're going to get some more of that information out to you. Our corporate office actually puts on some really good webinars. They've had some great people in, like Steve Richmond, some great marketing people. Steve was just on last week, and we'll continue to get that information out to you guys. I believe tomorrow's webinar is about being comfortable in front of the camera. And so as you're going to be doing more videos and more contacting your clients, kind of like we are today, really, I believe that's what that's about. And usually the one from Tuesday, because it's a two-parter, this one coming up tomorrow, the one from Tuesday will be available to be seen ahead of time. So was that what that one was about, being comfortable in front of the camera, Tony?
Yeah, so it's a video masterclass, and tomorrow is session 2, and all of them are available on demand. So anybody who's interested, we can send them the link, and they can watch that webinar, and then you'll be set up for tomorrow's.
Okay, perfect. And then I am going to need some rider signs from you, John. So I've got an agent asking me, so if you want to ship them out here, and then Gary, I'll get you squared away and get you the rider signs. You don't have an image of that anywhere that you could show us.
You know what? Let me go ahead and can you talk for like 3 more minutes, and I'm going to run out. Actually, I have all the stuff in the garage.
You have one in the car?
I can grab.
Yeah, you know what? It's fine. I did a little bit of a market update for a big team down in the south suburbs, so I'll give the market update while you're running the car.
Okay, cool.
Yeah, just the market update, guys. This is just based on the mortgage market. Most lenders are either at or over capacity right now. So there's a couple things that you guys as agents just need to be aware of. Number one is you're writing new offers. I would definitely not write anything that doesn't have at least the 30-day window for closing. Even our company, who really specializes in speed, we're being handcuffed a little bit by the appraiser's ability to turn things around and whatnot. So we're still getting things done in 30 days, but the business hasn't slowed down. So I would be, two things I would say: certainly 30-day contracts at a minimum. And as I say that, we did just close something last month when I closed it in like 15, 16 days, but the tide is kind of turning on that. The appraisers are taking a week, and so there's definitely a longer time. The other thing that I would encourage you to do, tell your buyers as they're working with their lenders, get their information in. That's going to help move these files and get them closer to closing. The other thing that I'll share with you is that as a lender, one of the things that we've done, because a lot of the smaller purchase prices have been very competitive, you've got people that are first-time home buyers now that are competing with other first-time home buyers, maybe even worse yet, competing with cash investors. If you're working with me and my team, we will call the listing agent and let them know how solid the buyer is. Let them know that we did grab tax returns. We did look at bank statements. Now, we're not going to release any personal information, but I think you guys as agents would probably feel more comfortable with an offer if the lender tied to that letter calls you up and says, hey, this is a strong buyer. Their credit's great. We've seen the assets. We've seen the income. Give us an opportunity to help sell your buyer to the listing agent and get that contract across. One other thing that we've seen as a trend is I've had a couple agents contact me and say, hey, my buyers can't find anything for what they're pre-approved for. So they're going to pivot a little bit and maybe look for properties that need work. We do renovation lending. We do the FHA 203K. We do the Fannie Mae home style, and we do the VA rehab program. So somebody that you might have had capped out at about three, we just did one yesterday. She was pre-approved for 375, could not find a multi-unit building at 375. Now we're going to try to do renovation where she can maybe pick something up at 275 and put 75 to 100 back into the property. So what it does for you guys as agents is it opens up those properties where right on the listing it says no FHA and cash only. Well, if we come in with a rehab loan, then the seller doesn't have to worry about making any repairs. You've got more inventory to show your buyers, and we're seeing a little bit of a trend for that. We've got a great product and a great team that takes care of that stuff. So definitely want to share some things with you guys on some trends. Rates are amazing. We're seeing rates in the twos pretty consistently. So yeah, that's been good. I did have a question come in from Lucila. Let's see, what do we got? Is there a turnaround time for appraisals that can take as long as 3 weeks? All right, so that one's probably for me. An appraisal should not take 3 weeks. So, that's one thing I have not seen. An appraiser can drag their feet a little bit if they're struggling with value. We did just have a situation with an appraisal out in, I want to say it was Hebron, but it was, or somewhere out very far west, where the county office wasn't open but 1 day a week because of the pandemic, and they needed square footage numbers that they just couldn't get. So we lost a week waiting for that employee who works part-time for the township to show up to confirm some things. Now, the one wild card about that, Lucila, is the VA appraisers. We have no control over the VA appraisers. The VA tells us who to use, when to use, and to be honest with you, since some of those guys are locked into that job, they really don't have a sense of urgency. So in a VA appraisal, could you wait 3 weeks? I've seen it, but it's certainly not optimal. We at Cross Country choose our appraisers to go into the panel, and those guys are pretty efficient. But again, everybody has their tolerances of what they can handle. Lucila, your second question is, and this is for you, John. Did IHDA increase the number of years on the forgivable loans?
So when we came out with the Access program, these were 10 years. The first home in Illinois, that was forgiven in 5 years. So it just depends on the program. I've been there 7 years, and we've had programs forgiven in 2 years, 5 years, and 10 years, I believe. So this forgivable is a 10-year term compared to first home, which was 5 years. So it is 10 years compared to 5 years because it's a different program. So
yeah, that first home Illinois program, which just ran out of funds, was a 5-year deal, and that was by far, I'm sure John can attest, their most popular program. So
yeah, we used to have actually 7,500 5 years ago in every county forgiven in 5 years. Wow. I think it was called Welcome Home Illinois or whatever.
Sure, and I remember that.
It was just, but as we try and develop programs, these are one thing about their programs. This program is, it's 10 years, so usually a portion will get paid back. I don't know the average time before they sell refinance now. The deferred and repayable, we're getting paid back. So it does allow us to take that money in and put it out for new customers. So that 10-year has to be in there for that forgivable on this program.
Okay. What did you find the signs?
Yeah, these are. I mean, it's you can see it's up to 10,000
nice.
in down payment. They're like a, I don't know if you can hear. They're actually a metal or whatever.
Oh, wow.
You can tie them or poke holes or whatever and put them at the bottom. But they're, that's basically what it says right there. A little, and to go a writer sign. So I will get some of those out to you, Rich. Even if, is there someone at your office now?
Yeah, we have people in here. There's always somebody here, usually between 9 and 5. So
Yeah, even if one day I want to take it just to get out of the house, right, and just go drop them off at your office, I could probably do that in the very
yeah. So Lucilla had one more question relative to the appraisal. So obviously she must have one that's stuck, and I feel bad for her. If it's non-FHA, is it acceptable for an appraisal to take 3 weeks? And the answer on that would be no. There's got to be a really good reason, such as my township explanation I gave to you guys. Otherwise, 3 weeks for an appraisal, it wouldn't be acceptable to me. Let's put it that way. So
Was it during that big refi, right when rates dropped? How long was it?
She had one that went from May 14th to June 8th.
It was settled.
Yeah, I know one that we had, the one I was talking about where the township was just closed and we couldn't get it. That was a refinance. So there wasn't buyers and sellers that were panicking. So, I was happy about that because we just couldn't get the square footage numbers that the appraiser needed from the township, not only on the property, but actually on the lot sizes, especially as you start going west out there. It's real relative. You start getting into acreage and whatnot. So, yeah. But, I would like the signs. I don't know, maybe Gary, if he's still there, could tell me how many he wants. And I've got to call Gary anyway. But if you could tell me how many you want, and then, we'd love to get those in here. And then, let's see here. If anybody wants information on the signing up, Tony, if you want to tell them how to get to the class that's tomorrow at 12 o'clock.
Yeah, let me put the registration link in the chat.
Okay. So John, I'm going to need at least, bring me anywhere from 6 to 10 signs. Gary's going to need 3 of them. So cool. You're muted, John, but what do you recommend for poking a hole on those signs? That sounded pretty hardy.
You know what? Someone actually sent me a picture. I'm going to see if I can actually find it real quick. I know this might not help you that much. I'm trying to, let me see how he put it on there. Trying to think if he emailed it or texted it. I'm going to look for it. Hopefully I can find it. But I don't know if he drilled holes or what he did. And sometimes, they have things you can set, little creases you can set it in or whatever.
Sure.
So whatever, I know you guys are very handy in what you do. So however you get it out there, if you want it out there, most certainly do. I'm trying to see if I find that example, I'll send you a picture.
Okay. If Gary's like me, he's just going to hand it to his sign guy and say, hey, put this on here. So
it shouldn't be that hard. Yeah.
So
absolutely. But I'll get you
right.
something out to you.
So on the video masterclass, again, if you guys, if you don't have enough time to copy the link, certainly in the chat box, just send me or Tony an email back and we'll make sure we can email the link out to you. John, I think we got our questions covered. I'm going to scroll back through chat and make sure I didn't miss anything. I think we're good there. So that's good. So John, thanks very much. If any of the announcements that you think are coming out today, I feel like we should have done this tomorrow, but if any of that you think helps our real estate agents, please reach back out for me, and Tony and I will put a marketing piece together and get that out to our agents as soon as we see it. So if there's something
I don't think it's going to affect anything with like down payment assistance.
Okay.
I think it's more for, because of COVID people struggling to make rent or mortgage payments. I could be wrong in that. But
that's okay. Send me that too, because I know sometimes the agents, just like myself, we're kind of leaned on by our consumer, like, hey, I'm struggling. What can you offer me? So send it to us anyway. We'll get it out, make sure the message gets out, okay?
Perfect. Appreciate that, Rich.
All right. Yeah, no, we appreciate you guys at IHDA. You and Tara. Tara does a great job. We love working with IHDA and getting people into places. So thank you guys for your attendance, and thank you, John and Tony, for helping me put it together. Take
Thank
care,
you,
everybody.
Rich. Everybody have a great day.
Thanks, guys. Bye-bye.